The average American works 40 years, saves every dollar they can, trusts the system, and right now, quietly, without a single headline, that trust is being dismantled. For the last few years, China has been executing a plan so bold, so calculated, that most Western economists didn't even want to say it out loud. They are doing something that has never been done in modern history. They are relinking gold, real, physical gold, directly back to their currency. Think about what that means for a second. While the American worker was busy just trying to keep the lights on, while families were stretched thin by inflation they didn't cause, China was quietly rebuilding the entire foundation of how money works. This isn't some conspiracy theory. This isn't a trade war talking point. This is the most consequential financial shift of our lifetime, and the people it's going to hurt most? They're the ones who can least afford it. Some people call this the debasement trade, but that's too small a word for what's happening. This is a direct challenge to the American dollar, to American savings, to the retirement accounts of people who played by the rules. So today, I'm going to break it down, simply, clearly, honestly, because you deserve to know. Here's what's happening. Because something unprecedented is happening right now. China has been buying gold at the fastest pace since World War I. The 50-year petrodollar agreement quietly expired in June 2024, and the yuan is now settling oil trades with Russia, Iran, Saudi Arabia, Venezuela, and the UAE. Think about that. 5 years ago, every one of those countries priced every barrel of oil exclusively in US dollars. Today, they're bypassing the dollar entirely. This is not conspiracy theory. This is data from the IMF, the World Gold Council, and central bank filings, and it tells a story the mainstream media refuses to connect. Note that this is not financial advice. This is pattern recognition based on IMF data, central bank records, and verified historical analysis. Do your own research. Here's what they don't teach you about money. The rise and fall of gold-backed currencies follows a pattern that repeats across every civilization that ever used it. Ancient Lydians in modern-day Turkey minted the first gold coins around 600 BC. The concept spread. Greece adopted it. Rome built its entire financial system on the gold aureus. For 700 years, Rome paid its legions in gold, financed its military, and expanded its empire. Then the spending exceeded the earnings. Nero debased the coinage in 64 AD, reducing gold content by 10%. By the 3rd century, coins that were once 95% pure gold contained almost none. Merchants noticed. Prices rose. The real economy hollowed out. By 476 AD, the Western Roman Empire was finished. Spain's story is even more instructive. They extracted literal tons of gold and silver from the Americas. For 150 years, the Spanish piece of 8 was the world's reserve currency. But too much gold created 500% inflation over 100 years. Spain became cheaper to import than to manufacture. The productive economy collapsed under the weight of its own wealth. Even a gold-backed currency dies when the underlying economy loses its productive base. That's not my opinion. That is documented history. Britain's pound took over, backed by the gold standard, trusted globally for 200 years. World War I drained it. World War II finished it. In 1944, Bretton Woods made the dollar the new anchor, pegged to gold at $35 per ounce. Then, in 1971, President Nixon closed the gold window entirely. The dollar became pure fiat currency, backed by nothing except American military and economic dominance. For 50 years, that was enough. Until now. Here's what the financial media gets wrong about China's gold strategy. They focus on official numbers. China officially holds 2,306 tons of gold through late 2025. 11 consecutive months of purchases. Gold now represents 7.7% of total foreign reserves. Those numbers are significant, but they're also the minimum. Société Générale analysts estimate China's real purchases in 2025 run 10 times higher than officially reported. Gold market researcher Jan Nieuwenhuis estimates the People's Bank of China secretly accumulated 1,800 tons between Q3 2022 and end of 2024 alone, 5 times more than publicly disclosed. His total estimate for PBOK holdings? Over 5,000 tons stored in Beijing. If accurate, China holds more gold than any country except the United States, which officially claims 8,133 tons. Why the secrecy? Because announcing it would trigger panic. Every dollar-denominated asset would reprice overnight. The signal would be unmistakable. China is preparing for a world where the dollar is no longer the anchor. And gold is only half the strategy. China launched yuan-denominated crude oil futures on the Shanghai International Energy Exchange in March 2018. 7 years later, the petro-yuan is fully operational. Russia, Iran, Venezuela, Saudi Arabia, and the UAE all settle oil in yuan. China imports over 11 million barrels of oil per day. At current prices, if just 30% settles in yuan, that's over $80 billion per year in dollar demand that simply disappears. They also built a parallel financial infrastructure to bypass the dollar. China's cross-border interbank payment system, known as CIPS, now connects 4,800 banks across 185 countries. Still smaller than SWIFT, but growing faster every quarter. Even though every indication seems to be the end of the US dollar, but here's my honest take, and I want to be straight with you because this is my own view. China is executing a brilliant long-game strategy. Gold accumulation, payment infrastructure, petro-yuan, CIPS expansion. The direction is clear. The trajectory is undeniable. But can the yuan actually replace the dollar? Not in this decade. And here's the one reason why. Currency dominance is not about gold reserves or manufacturing power. History proves it's about one thing: trust. Universal trust, not bilateral trust between trading partners. Trust that any country in the world can hold your currency and not wake up one morning to find it frozen. The British pound was trusted because British courts enforced contracts fairly and consistently, whether you were Indian, American, or African. The dollar is trusted for the same reasons. American institutions, for all their flaws, allow capital to flow freely in and out without government interference. China imposes strict capital controls. If you accumulate yuan and want to move it, Beijing decides whether you can. No sovereign wealth fund, no central bank, no serious long-term investor wants to hold a currency where the issuing government can freeze assets by policy decree. The yuan currently represents only 2.5% of global foreign exchange reserves. The dollar holds 57.7%. The euro sits at 20.1%. For all of China's aggressive buying, building, and promoting, the yuan cannot break through a meaningful ceiling in global reserves. Okay, to back up my claim, the BRICS currency project proves the problem. Years of meetings, summit after summit, no practical result. Why? Because Russia, India, China, and Brazil each refuse to let another's currency dominate. Each considers themselves a superpower. None will subordinate their monetary sovereignty to another country's central bank. That's not a weakness, that's reality. So, if the yuan can't replace the dollar, what's the actual threat? Not replacement, fragmentation. The dollar's share of global reserves dropped from 73% in 2000 to 57.7% in early 2025, a 15-point fall in 25 years. That money isn't moving into yuan. It's spreading across euros, Swiss francs, gold, and now digital assets. No single winner. Multiple alternatives gaining ground simultaneously. This fragmentation is more dangerous for American financial power than any single competitor. When no single currency replaces the dollar, but the collective alternatives exceed 50% of global reserves, the mechanics of American power change permanently. Washington can no longer finance unlimited deficits by issuing treasuries that the world automatically absorbs. The inflation tax stops being exported. It stays home and destroys American purchasing power. And also, there is another dimension everyone is sleeping on: Bitcoin. This generation doesn't trust central banks, period. Not the Fed, not the PBOC. They trust code. Bitcoin's fixed supply of 21 million coins makes it the hardest money ever created. No government can print more. No central bank can debase it. I hope you're aware that Iran uses Bitcoin to finance imports under sanctions. El Salvador adopted it as legal tender. Institutional adoption is accelerating. I personally believe that the future may not be a dollar world or a yuan world or a gold world. It may be fractured, dollars dominating Western finance, yuan anchoring Asian trade settlement, gold sitting in central bank vaults as the ultimate geopolitical hedge, Bitcoin serving as the stateless reserve for whoever trusts neither governments nor central banks or China's yuan. Now what should you do? First, understand what gold is actually signaling. Gold hit record highs in 2025 not because it is becoming more valuable, because dollars are becoming less valuable. Central banks globally purchased 415 metric tons in just the first half of 2025 alone. They are not buying it as an investment. They are buying it because they no longer fully trust the fiat currencies they hold, including the dollar. Secondly, recognize the yuan's real trajectory: slow, structural, expanding in bilateral trade and commodity settlement. Not replacing the dollar globally in your lifetime, but gaining ground. That has real implications for commodity markets and Asian trade infrastructure. Third, do not ignore what Bitcoin represents in this picture. When the US weaponized SWIFT against Russia, every country without American alliance status took note. They started building alternatives. Bitcoin is stateless and borderless. That is not a flaw. That is its most powerful feature. Fourth, the factor everyone misses is trust. Any currency, asset, or system that wants to challenge the dollar must answer one question first. Can people trust it with their life savings? Not for a single oil trade, for generational wealth, for the future. Gold has 5,000 years of that answer. The dollar has 80 years. The yuan has not yet earned it. Here's my final take, and the reality nobody wants to say. The dollar is not being overthrown. It is being quietly abandoned, gradually, then suddenly. The pattern is the same as every reserve currency before it. Subscribe now. Hit that notification bell, because part 2 is coming. I'm breaking down exactly which currencies survive fragmentation, which commodities explode when the petrodollar fully collapses, and what a multipolar monetary world means for your portfolio. The transition is inevitable. Your preparation is optional. Position correctly. Act decisively. Time is running out.